Let's talk about how a Trump presidency will affect the real estate market. As we all know right now, the housing market is at the highest it's ever been in terms of pricing, as well as the lowest amount of supply in the market for inventory. Combine that with the highest interest rates we've seen in the last 20 years, makes it a very tough market for anyone wanting to buy or sell. Potential home buyers and real estate investors alike are all anxiously awaiting to see the changes that will happen with President Trump now in office and how it will affect the real estate market. We all know President Trump is a real estate guy. That's how he got famous. That's his main business before he became a politician. And many investors are hopeful that with Trump in office, real estate prices will go up and the market will do better again, as it was shown in his last presidency. Now, from what I've read from his inauguration and his executive orders is that he wants to make housing more affordable to everyday Americans. So he's talking about single-family homes. However, I think commercial real estate will actually rebound and go back up in pricing and value, as that had happened during his last term based on some rules and laws that he passed. So one of the things that Trump mentioned was to deregulate what it takes to build housing in America. During his first day in office, he signed an executive order for emergency housing price relief for everyday Americans. He states that Americans are unable to purchase houses because the prices are so high due to, in a large part, regulatory costs. He says regulatory requirements such as permits, fees, and stuff that the city and local governments charge, and all that red tape to build, costs about 25% of the total building cost itself, which is what is raising the prices to build and therefore raising the prices when they sell the homes. So he wants to cut back on these regulations and processes to make it more streamlined and cheaper. And the theory is, in turn, with the lower cost to build, as there's less cost for permits and regulation, then the sales price of the homes will be lower, helping the American people buy houses at a cheaper price. This will also, hopefully, in turn, help builders and developers build more and increase the supply to help meet the demand that there currently is for housing. Now, while I think this is great in theory, I think it might be too difficult to execute in reality, because building codes and building enforcement is all at a local city level, not a state or federal level. And each city or county has their own rules and regulations and codes for buildings, and rightfully so. It's very hard to have a standard national building code when the country is so diverse geographically. For example, you get snow up in the north and northeast. However, in the Gulf Coast, you have hurricanes. So being built to code to withstand windstorm and hurricanes is a big design in the structures of the homes and the plans. However, you go out to the West Coast like California, earthquakes are a real threat. So the design of the structure has to withstand earthquakes. So it's all very different types of code for different types of climates and geographical threats. So Trump trying to deregulate and streamline the codes and the permits on a national level will be very tough to implement, as every state and every area has different requirements due to the weather and geography. Now, some alternative ideas is that Trump can provide incentives to local municipalities to increase housing stock. For example, Trump could say, hey, city of Dallas, for every new unit of housing that you allow or permit, we'll give you $5,000 or $10,000 to the city. That will incentivize them to approve more plans and more permits for new construction to increase the housing supply. Or another option is to provide grants or government assistance to builders and developers. What that could look like is providing grants to pay for the dumpster costs, subsidized by the government or the city for developers. Another cost they could subsidize is if they're going to tear down a derelict or run down dilapidated structure to build new housing, then the demolition costs can be paid for or subsidized by the government to incentivize the builders to go build on lots that have rundown buildings to tear down these eyesores and bring back housing supply to the market. And that will lower the cost for the builder, as they don't have to pay for the demolition. So those are some ideas of what Trump might mean by this deregulation, instead of the actual literal idea of changing the building codes of each city in the entire country. Another possibility is to reduce the fees associated with mortgages like FHA and VA loans, as those are government-owned mortgages at the moment, and reducing those fees can mean less cost for the home buyer when they're buying their home. Ideas such as lowering the PMI amount or reducing the term of PMI so the buyer doesn't pay as much monthly are ideas that are floated around for making it more affordable for home buyers. Another idea is Trump decoupling FHA and VA loans from the government and privatizing them to private companies. And he actually started doing this in his last term in presidency, but he ran out of time. So that might be another thing that he resumes or tries again, now that he's president again, as he had shown in the past he wanted to do those things. However, many of Trump's critics are concerned about his policies on tariffs and how that would lead to higher inflation and higher building and housing costs. After Trump won the election, he mentioned that he would place a 25% tariff to Canada and Mexico effective the first day he's in the office. However, after the inauguration, he decided to push that date back to February 1st. And that would directly affect build prices because most of our lumber for building comes from Canada. And we can see during his first term as president, he had placed a tariff on Canadian softwood lumber, and that increased the average cost to build a home by about $9,000 just because of that tariff. So if he puts more tariffs again during his second term, that can increase the cost even more for building a single-family home here in the USA. Another thing Trump had mentioned was that he would cut mortgage rates. He promised the American people he would make that more affordable by cutting mortgage rates. However, I don't think that's going to happen because one, the president doesn't really control that. Mortgage rates are tied to the bond market, not to the presidential actions. And two, I just don't see inflation coming down this year, and I just think mortgage rates will stay high for the rest of 2025. So I don't think there's any immediate relief on that front, at least for this upcoming year. Another idea that Trump brought up was opening up federally owned land for development and construction to create more housing. Well, I think that's a great idea in theory. In reality, the majority of land owned by the federal government is in the West Coast, like California, Nevada, Arizona, that area. So while that might help supply in those areas, it wouldn't really help anyone on the East Coast, the South, or the Midwest. Now, Trump has also a strong stance on immigration, and in this first week of presidency, we have seen him ramp up ICE raids and deportations of illegal immigrants. Now, that does have an effect on the housing market, and let me explain how. Now, this is a double-edged sword when it comes to housing affordability. On one hand, states with a lot of illegal immigrants like California, Texas, and Florida will see a relief in rental prices as almost all illegal immigrants are renters. And if you take them out of the renter pool, then the demand will drop down a lot, and the supply, even if it stays the same, you'll have a lot less people fighting over the same apartments or rental units to rent, and therefore rent prices should decrease with less demand for rentals. This could be some welcome relief to renters as prices have been increasing like crazy since the pandemic. However, you might now see rent decreases where prices are dropping due to a lot of demand being taken out of the marketplace for renters. Now, the downside of this double-edged sword is that the labor pool for new construction and for contractors, illegal immigrants make up a big portion of that. And if you deport all of them, you're gonna lose a lot of skilled laborers, and you're gonna have less talent and less workers in the labor pool, and therefore less supply. And the demand will go up and the prices will go up, therefore increasing the cost of construction and therefore passing those prices on to the end consumer or the home buyer when they go and buy the home. Earlier in the video, I mentioned about rules and regulations that Trump passed during his first administration that increased the values and affected real estate, especially real estate investors. Now let me go in detail on that. Back in his first term, President Trump passed the Tax Cuts and Jobs Act of 2017. Now there's a bunch of stuff in there, but for the real estate stuff, the two main things that were created was opportunity zones and bonus depreciation. Now, the first one, opportunity zones. Trump and the government created that in an attempt to bring capital and bring investments into underserved areas. The whole idea was investors want to not pay taxes and they want to save money. So how about we redirect their capital into underserved communities across the country and give them tax breaks. So therefore, they're not paying as much as taxes and winning on that end. And then the community is getting developed and new capital to revitalize the neighborhoods. And that's also a win on their side. So the whole idea was a win-win situation. Investors don't pay as much taxes, and underserved communities get some capital into their neighborhoods and revitalize their neighborhoods. My personal opinion on why it wasn't as successful as it should have been was because of the holding times. You had to hold it for 5 years and then 10 years to really see the maximum tax benefits. And I think that's just way too long for a lot of investors. They didn't want their money tied up in something for 5 to 10 years. However, the biggest change from the Tax Cuts and Jobs Act was accelerated bonus depreciation. The rule stated that properties that were placed into service, aka bought or owned by a new owner, between September of 2017 and December 31st of 2022 were eligible for 100% bonus depreciation in year one. So what exactly does this mean? Normally, if you own a property, you can depreciate the property over the life of the property. So for example, the traditional method is straight line depreciation, where you take the depreciation of the house or the building over 27.5 years. That's the simplest method to do depreciation calculations, and most beginner CPAs or accountants will do this method. Now with bonus depreciation, a lot of items like flooring, fencing, appliances, etc. all can be depreciated 100% in the first year instead of having to spread it out over its lifetime. Let me give you a quick example. If you own a rental property and let's say you net $18,000 a year in rental income after your mortgage and expenses, with the normal traditional straight line depreciation, you can knock that $18,000 of income down to about $7,000 of income for your taxable income due to depreciation. So instead of getting taxed on $18,000, you're really getting taxed on $7,000 because the depreciation took out $11,000 of losses or paper losses on your income. And that sounds great, right? You're cutting your taxable income down by over half. But now if you apply a cost segregation and combine that with the 100% accelerated bonus depreciation that Donald Trump implemented in the Tax Cuts and Jobs Act, you could potentially turn that $18,000 of net income into a $22,000 loss on paper on your taxes. And that's a $40,000 swing. So instead of making $18,000, the IRS now sees you as losing $22,000 on that property. And therefore, one, you're paying $0 in taxes on that $18,000 income. But now, if you're a qualified real estate professional, you can take that extra $22,000 loss and offset it or write it off to your other income. So let's say in that same year, you flipped a house and you made $22,000. Now, not only are you paying $0 in taxes on that $18,000 of income you got from the rental property, you're also going to offset that $22,000 of income with your $22,000 paper loss on the rental property, and therefore pay $0 of taxes on that $22,000 income on the flip. So you made $40,000 tax-free. So now you can see how powerful that is from this Tax Cut and Jobs Act rules that were applied with this bonus depreciation. Don't worry if all that seemed very confusing to you. Essentially, Trump passed a law where you can depreciate or take more losses on paper and use those losses to offset your other income to therefore pay a lot less in taxes. If you guys really want a more detailed step-by-step breakdown of this whole process, I can make a whole nother video for that. Just leave a comment below asking that you want more explanation on a cost segregation and bonus depreciation video. Now imagine that scenario, but scale it up 50 to 100 times for large apartment complexes. You can see how much people can save in taxes, and that's why people were paying more for apartment complexes and commercial real estate because of the tax benefits. And these policies directly brought in a golden age for commercial real estate from 2017 to 2021, as people were paying more and overbidding on commercial properties, all for the tax benefit. So even if it wasn't a good deal or wasn't cash flowing that well, the amount of taxes that they were saving made it worth it. For example, let's say an investor has a tax bill of $300,000 at the end of the year from all the money he's made. He might go out and buy a commercial property that's maybe worth $1 million, but he'll pay $1.2 million because with the cost segregation and bonus depreciation, he can get a paper loss of around $300,000 on that $1.2 million property and essentially offset his entire tax bill. And in his mind, he might think, okay, I'm paying $200,000 more than the property is worth, but I'm not paying $300,000 in taxes anymore, so I'm actually saving $100,000 if I buy this property. Now, it might not make the best investment sense, but some people were thinking like that during this time, causing prices to keep going up for commercial real estate. However, when this rule was implemented, it was meant to be phased out starting in 2023. That has already started. It dropped from 100% to 80% in 2023, and now in 2025, it's only down to 40%. Now that Trump is back in office and the Republican Party won both the House and the Senate, it is widely believed an extension or a replacement of the Tax Cuts and Jobs Act will be coming to bring back the bonus depreciation and the increased standard deduction. This could lead to more developments in the large apartment complex space, or people buying and renovating dilapidated or outdated apartments, and this could in turn increase the supply of rental units and therefore bring down the prices of rentals, making housing more affordable. At the end of the day, there are so many factors affecting housing affordability. We have high interest rates. Materials have gone up across the board, from HVAC to lumber to electrical wiring. And then we have labor shortages, which has increased labor prices. Not to mention insurance rates have been jumping up and going through the roof every year due to so many more natural disasters that are happening every year. And then also we have property taxes increasing like crazy in states like Texas. So there is no easy or simple fix to the housing affordability crisis, but at least what we've seen so far, Donald Trump is focused and committed to reducing the cost of housing and to provide more affordability back to the American people. My thoughts are prices will still stay high, at least in the immediate future, as it takes time for these rules to be implemented, and with inflation still being high and interest rates not really dropping for mortgages, I think 2025, it will still be the same as it's been, and maybe in 2026 we'll start seeing a little bit more affordability with more supply, better regulations, and lower interest rates on mortgages. As a homeowner or an investor, I think it's still a good time to sell if you have a good product. While for potential home buyers looking to buy their first home, unfortunately, I think the market will still be tough. Of course, real estate is a very localized market. I think markets like Texas, where building regulations are not as strict and supply is constantly coming on board, prices will still remain more affordable compared to the coastal markets where it's very tough to develop or build and there's a huge lack of supply. If you enjoyed this video or got any value out of it, please like and subscribe to the channel for more real estate content and leave a comment below on your thoughts of the housing market.